Today in crypto. Bitcoin price started a downside correction from the $68,500 zone against the US dollar. BTC might start a fresh increase unless there is a break below $64,000. Bitcoin price gained pace above the $65,000 support zone. BTC extended its rally above the $66,500 and $67,000 resistance levels. The price even surged above the $68,000 level. It traded to a new all-time high near $68,495 before there was a downside correction. The price declined below the $68,000 and $67,800 support levels. There was a break below the 50% fib retracement level of the upward move from the $65,200 swing low to $68,495 high. However, Bitcoin still trading above $65,000 and the 100-hourly simple moving average. There is also a key bullish trend line forming with support near $66,000 on the hourly chart of the BTC/USD pair. On the upside, an immediate resistance is near the $67,500 level. The first major resistance is near the $68,000 level. A clear break above $68,000 resistance may possibly call open the doors for a fresh increase. The next major resistance sits near the $68,500 level. Any more gains might lead the price towards the $70,000 level. If Bitcoin fails to clear the $68,000 resistance zone, it could extend its downside correction. An immediate support on the downside is near the $66,500 level. The first major support is now forming near the $66,400 level. It is close to the 61.8% fib retracement level of the upward move from the $65,200 swing low to $68,495 high. The next major support is near the $65,000 level, below which the price could dive towards the key breakdown support at $64,000 in the near term. Technical indicators. Hourly MACD. The MACD is now losing pace in the bullish zone. Hourly RSI, Relative Strength Index. The RSI for BTC/USD is now just below the 50 level. Major support levels. $66,400. Followed by $66,000. Major resistance levels. $67,500, $68,000 and $68,500. Commissioner Caroline Crenshaw wants DeFi projects to cooperate with the SEC in order to find solutions for compliance with existing regulations. SEC Commissioner Caroline Crenshaw has highlighted the benefits of decentralized finance while warning of the dangers of failing to embrace a protective regulatory framework in a November 9 opinion piece. The article, DeFi Risks, Regulations, and Opportunities, is the first in the inaugural issue of the International Journal of Blockchain Law. In it, Crenshaw outlines her belief that the DeFi community must address issues with transparency and pseudonymity while coming into compliance with SEC rules. Regarding what she sees as a lack of transparency, Crenshaw said DeFi lacks market protections, which contributes to a two-tier market in which professional investors and insiders reap outsized returns. Although the code for most DeFi projects is open source and all transactions are recorded on-chain, she argues that retail investors are at a disadvantage to professional investors, who have the resources to perform audits on code and development teams. In her view, it is not reasonable to build a financial system that demands investors also be sophisticated interpreters of complex code. Crenshaw also highlighted concerns about the link between pseudonymity and market manipulation. When market participants operate pseudonymously, she argued that it becomes difficult to track and mitigate manipulation through the use of bots and collusive trading. She said that investors tend to be most vulnerable to losses as a result of market manipulation since normal signals, like trading volumes and momentum, become unreliable. Furthermore, she believes that DeFi projects should be in open discussion with the SEC to find solutions to the dilemma of resolving how pseudonymity can comply with existing rules. The DeFi space has historically touted the ability to remain pseudonymous as a feature, rather than a burden on participants. Crenshaw, however, doesn't believe investors prioritize it over making money. In an October 12 speech at the SEC Speaks Conference, Crenshaw suggested that existing regulatory frameworks, such as gatekeeping functions in other markets, are sufficient in protecting investors in the digital market space. Related, regulators are coming for stablecoins, but what should they start with? While Crenshaw's current criticisms of DeFi do not quite echo the bellicose sentiments from Senator Elizabeth Warren and former Commodity Futures Trading Commissioner Dan Berkowitz, they are less favorable than the approach of SEC Commissioner Hester Peirce, who supports a safe harbor law that would grant network developers a 3-year grace period to build a decentralized network. "We're glad to welcome you to the global home of Web3," said crypto-friendly Mayor-elect Eric Adams in response to Citicoin's rollout of the Nicoin this week. The Nicoin is set to launch on November 11 with a community-led proposal endorsed by New York City's Mayor-elect Eric Adams. The NY-focused cryptocurrency is being launched by Citicoins, the same firm that provides the Miami coin. The project utilizes the Stacks protocol built atop of the Bitcoin blockchain to enable smart contracts and issue its coins. Citicoins tweeted on November 9 that it was activating Nicoin mining this week after Adams stated on November 4 that he wanted to have a Citicoin for NYC like in the case of Miami City. Adams followed that up earlier today by posting that "We're glad to welcome you to the global home of Web3. We're counting on tech and innovation to help drive our city forward. We're glad to welcome you to the global home of Web3. We're counting on tech and innovation to help drive our city forward." Adams was elected as the NYC mayor on November 2 and will take the reins at the start of 2022. The 61-year-old Democrat is a strong crypto proponent and has vowed to take his first 3 paychecks in Bitcoin, BTC, and has advocated for crypto education to be taught in local schools. "We must open our schools to teach the technology, to teach this new way of thinking," Adams said on CNN's State of the Union on November 7. In Miami, the city's commissioners voted to accept funds generated from Miami Coin. However, Citicoins notes that it is yet to officially partner with the NY government despite the social media endorsement from Adams. Citicoins like Nicoin are grassroots initiatives. As communities grow around Citicoins, they can encourage their mayor to claim the reserved city treasury wallet and begin putting its funds to use, the website reads. Related, law decoded. Which currency is the paycheck of your city's mayor in November 1 to 7? If the city of New York agrees to partner with Citicoins, it will have access to a custodied reserve wallet that holds 30% of all Nicoin mining rewards. The funds can be used to support whatever initiatives the city deems fit. Miami Mayor Francis Suarez has stated the coin's funds will go toward crypto education, funding underprivileged communities and programs to mitigate the risks of climate change. Nicoin users can mine the coin by forwarding Stacks, STX, tokens into the smart contract on Stacks, and receive new Citicoin tokens, with 70% of the mining rewards going to users who lock up and stack or stake their Citicoins. The fintech firm wants to let its enterprise clients have access to cryptocurrencies through a new service called Liquidity Hub. Fintech firm Ripple has announced a new service aimed at finance companies that will allow them to offer cryptocurrency trading to customers. Ripple unveiled the Liquidity Hub service in a blog post on November 9. Touting a crypto-first future in which every company will need to have a strategy for crypto assets. The new service will target its enterprise clients, giving them access to digital assets from a range of providers such as exchanges, market makers, and over-the-counter (OTC) trading desks. It is currently in the preview stage and will launch in 2022. Liquidity Hub will initially support Bitcoin, Ethereum, Litecoin, Ethereum Classic, Bitcoin Cash, and XRP, with availability varying by geographical location according to the announcement. The company plans to expand its crypto asset offerings and include other tokens including NFTs in the future. RippleNet General Manager Ashish Birla said that the company has been using this crypto sourcing technology to support its on-demand liquidity (ODL) product for nearly 2 years. He added, "Our customers would want access to the same trusted one-stop shop for buying, selling, and holding crypto assets that has powered our own extensive work with financial institutions." America's first licensed Bitcoin ATM company, Coin, is the first partner for the alpha version of Liquidity Hub. Related, over time, we will see the NFT market broaden, says Ripple CTO David Schwartz. Ripple is also delving deeper into DeFi, announcing plans to offer crypto staking and investment services. Burla added that it is only logical that clients will want the next generations of services after buying and holding Ethereum. On November 6, Cointelegraph reported that Ripple will be supporting Wrapped XRP, WXRP, on the Ethereum network, enabling holders of its native token to interact with DeFi protocols. The San Francisco-based fintech firm is still embroiled in an ongoing battle with the Securities and Exchange Commission. In the latest turn in the saga, Magistrate Judge Sarah Netburn has ordered the company to find and produce video and audio recordings of its internal meetings for evidence in the case. The financial regulator is suing Ripple and its executives for allegedly raising more than $1.3 billion through an unregistered securities offering. The cryptocurrency market continues gaining significant attention because it has defied many odds to become a trillion-dollar industry. Reportedly, the crypto market capitalization was a stone's throw away from the $3 trillion mark because it recently stood at $2.96 trillion. More participants are eyeing this sector, given that the crypto exchange web traffic has witnessed a 15.5% increase month-on-month. Mom Lars, a researcher at The Block, explained, cryptocurrency exchange web traffic increased to 473.3 million visits in October, plus 15.5%. Corporates have also been setting the ball rolling in crypto adoption. For instance, payment giant MasterCard recently partnered with 3 cryptocurrency providers to launch the first crypto-linked payment cards in the Asia-Pacific. Furthermore, there is a high likelihood that most financial institutions will offer crypto trading services in the next 1 to 3 years. Bitcoin on exchanges nosedive. Bitcoin, BTC, balances on crypto exchanges have been downtrending, and this played an instrumental role in enabling the top cryptocurrency to reach historic highs of $68,500. Crypto analytic firm Glassnode stated, as Bitcoin hits new all-time highs, exchange balances continue to be depleted. Exchange reserves we track account for just over 12.9% of the circulating supply and are still seeing outflows, even at ETH prices. Bitcoin leaving exchanges is bullish because it symbolizes a holding culture. On the other hand, crypto whales are not relenting in their quest to accumulate more BTC. For instance, Whale Address is holding between 10,000 and 100,000 BTC recently bought an additional 43,000 BTC in just 5 days. Meanwhile, Bitcoin is cementing its status at the $1 trillion market value, as acknowledged by market analyst Will Clemente. He noted, 17.5% of BTC's money supply has moved above the $1 trillion market cap threshold. With crypto exchange web traffic experiencing exponential growth, whether this will continue increasing the cryptocurrency market value remains to be seen. Hit the like button and subscribe to the channel.